on a warm summer's evening. On a train bound for nowhere, I met up with a gambler. We were both too tired to sleep. You got to know when to hold up, know when to fold up, know when to walk away, and know when to run. You never count your money when you're sitting at the table. There'll be time enough to count when the dealing's done.
Happy to have you guys join a little podcast session today. We normally talk only poker on this podcast, but I speak with you guys both individually a lot about crypto and other topics. And I consider the two of you to be two of the kind of sharper people that I talk to about these topics, but you have very opposing views. So I thought it'd be fun to just hop in a podcast. Obviously, like we all have very similar interests and like we're both in the crypto streets. We're both we're all three of us are interested in poker and investing and things like that. So I thought, with all the turmoil kind of in the markets and like a lot of people are watching these like wild BTC moves and want to hear what people like yourself have to say. And I just think because you guys have such different viewpoints, it would be fun to just have a conversation about it. So welcome.
Thanks, Sam. Great to be here. Hey, Brian.
Hey, Vinny. Yeah, we've played a couple times, but haven't gotten a chance to talk. So I'm looking forward to it.
Likewise. Are you going to go to the Bahamas?
No, I'm
Okay.
going to stay in. I actually was in Sao Paulo. I played some tournaments there, but I'm going to just stay in Vegas for the next few weeks. I'll play the win stuff.
Yeah, I'll play the high roller for 25K.
Okay. You're going to be in Vegas too then?
Yeah, so I'm heading back from Bahamas. Then I'm going to go to Vegas just to play the 25K.
Okay. Cool.
Yeah,
Well,
should be fun. Look, we hang out there.
When you're here, we should all three of us go get dinner.
Absolutely. Would love it.
I don't know. I'd love to actually let Vinny start, sort of.
Yeah. Before you jump into it, I'm pretty sure that our whole audience knows who Brian Rast is. He's been on several of our podcasts already, and he's obviously a Phenom team pro, but they might be a little bit less familiar with you, Vinny. So yeah, if you could just give like a super quick introduction on your background, like your audience obviously will know who you are, but just for the on the button audience.
Sure. I'm a long-time, I'm a tech entrepreneur. I was, born in South Africa. I built a ad tech platform, a payments company. Sold that to First Data, which became Fiserv. And then I got involved in cryptocurrencies and Bitcoin in 2013. So kind of one of the OGs in the space. When my company got acquired, Gift, GYFT, it was the largest Bitcoin website in the world. We did 1.5% of all Bitcoin transactions were to gifts. People buying gift cards back in the early days. So it was a pretty big platform. And then I did one of the big ICOs in 2017 with Civic. I was a partner at Multicoin Capital when we started our team. And I led the seed round in Solana, the famous 4-cent round. And I was the partner on that deal. And a whole bunch of other deals, seed investor or angel investor in BitGo and first invest in Filecoin. So I've been around for a long, long time. I invest in a lot of funds. But funny, the connection to poker was one of my passions when I was young. And, I worked in an online casino back in 2002. And we launched, it was kind of like the Party Poker days. We launched a competitive network to Party Poker. It was Streamer Poker Network. So I learned how to play online poker with, through my boss. He was a Harvard grad and he was into poker. So he taught me how to play. And I because we were running an online casino, it obviously made sense. I just loved it. So I came to the World Series a couple of times. And I made the decision to not become a poker pro. It was funny because I was really, really into poker. For me, it was just like I wanted to go build stuff and build companies and focus on that sort of career first. And I was always in the mindset that I'd get back to poker at some point or I'd do it socially. And I kept playing it socially for years. In Silicon Valley, I was part of like Chamat's game and JKL's game and that sort of thing when I lived out there. We used to play a lot with Phil Hellmuth every week. But I didn't take it.
That's a fun game.
Yeah,
I've played in the game a handful of times. It's a fun group.
It's a great group.
I enjoy the break for dinner.
Exactly. Yeah, no, it's great. And so I've been doing that for since 2009, I think. So it's a long time playing with those guys. And so the connection to poker was just it was a social thing for me. And then, I think in the past 2 or 3 years, I decided to take it a bit more seriously because I stepped down from CEO responsibilities in my other companies. So now I'm just like an executive chairman type person. I do a bunch of calls during the week. I don't manage people. I spent 25 years managing hundreds of people over my career, probably 1,000 plus. And I just decided I want to just spend more time doing poker, flying planes, have a little surf, getting my pilot's license. And making movies in Hollywood. Yeah, total career change, but I still have my ties into crypto and tech, and I have a portfolio of over 200 investments. I'm obviously one of them. Big supporter of what you're doing there, and love the model. Having worked in online casino and online poker room, I just think this is the way it should have been done if we had blockchain 20 years ago. Just dealing with all the payments issues and whatever else. So just super excited. I think this is I tell people this is probably the best model I've seen for a token that actually works. I retweeted Brian's post on X a few weeks back because I just totally agree with him on that. So that's just my background, and now, like I said, I'm playing the poker tours and doing the Tritons and series of pokers, and trying to pick up a bracelet or a win or whatever.
Fine. I mean, like, the truth is that it's poker. You can kind of go as far as you want with it, especially now, I'd say, with like modern solver tools, right? Poker is converging a little bit more towards games like chess. I mean, it's not as far now, but just like the ability to study. Like, I think most people don't really understand. It's like what you can do with solvers today. Because listen, I've been playing poker for over 20 years. I achieved very high levels of play prior to solvers. And it's like, it's what's happening then is similar to today, except it was way more imprecise. Like, you kind of felt out, okay, my opponent's kind of doing this, or this is how I'm going to respond. And it was like this general feeling. It wasn't, based off of like what happens when you look at a solve is the solver's playing itself. And then at some point you ask yourself, like, when is my opponent not going to be doing this strategy, and how is it going to differ? And then how do I want to respond? That's like so much more precise than, say, the exploit game was 10 plus years ago, where, you kind of got this general feel for, oh, my opponent's like not bluffing here, or like after he checks, he's super weak or gives up, et cetera, et cetera. But now, like, not only is there that kind of feeling, but anyway, not to get too much into poker theory, I just thought I would, because obviously you love poker, but it's kind of like, I mean, playing poker kind of just more on an amateur level for fun is pretty sweet. I've done more of that kind of like poker playing in the last 4 years or whatever since COVID. And it's fun too, right? Poker's a great game, one of the best, but it's like, you can put in infinite amount of work into it in order to just kind of keep improving, or you could do a bunch of great stuff and your life has worked out super well. And I mean, I guess the transition, what I would say is that, talking about, let's say, like Bitcoin or MSTR or whatever, I've kind of, not really with MSTR, I haven't really written much about MSTR, but I've definitely written a lot about Bitcoin. I mean, I have an article that takes at least 30 minutes to read with a bunch of stuff I've reformulated, including a really big edit like 6 months ago using AI and just updating everything, where I've pretty much let the world be known where I think Bitcoin is an amazing, like, generational investment, and I've outlined the reasons why. And I kind of love having these type of conversations. I've been looking forward to this for a while, both from the Bitcoin aspect, but also from what Matt was telling me, the MSTR aspect, which I think I also disagree with you on that. I'm a little bit less going to defend it to the death in the same way that maybe I would with Bitcoin, but like, yeah, that's part of the reason also why I kind of feel like maybe the best thing is for you to start, because I've very publicly let my opinion be known, both through my article and
Well,
podcast. And I guess it'd be good to kind of start with, you've been in the crypto space for a while, so I'll end this with a question. You're very familiar with it. Like, what do you see the problems being with investing in Bitcoin today? And also maybe specifically or not, depending on where you want to go, like how it relates to MicroStrategy and what they're doing.
cool. So I'll answer that. And I'll just finish off with I want to finish what you were saying about chess versus poker. I was a chess player growing up. That was my
Okay.
game. Played a lot of, endless on chess tournaments and nationals and stuff in South Africa. The simple people who haven't played chess or don't really understand the similarities. There's a lot of so chess is a deterministic game. Both players have access to all the information equally, and so it's very easy to determine what the optimal outcome is. Poker is a probabilistic game. And that's the difference. So there's imperfect information. You don't know two of the cards in total. So the solvers are great. Look, I grew up with reading a lot of Harrington and Hold'em type books, Super System, all that stuff, the traditional sort of poker theory. And then having come across solvers, I think solvers are fantastic. on many levels. I think that they're still living in the probabilistic world. So sometimes you'll do this, sometimes you do that. Basically, but yeah, it doesn't factor in who the players at the table are and how they behave and some of the action that's happening. And so just the nuances of being around a ring of guys who are like ultra aggressive on the button or whatever the case is. And so I think the solvers miss the human element a lot, but it gives you a good probabilistic strategy based upon optimal outcomes for, what is, I'd say, in a world where everyone played perfect strategy poker, right?
Well, hold on.
And
Let me respond to that real fast. So we'll talk
sure.
poker before we get into Bitcoin. Here's the thing, and this is why I was very careful with how I phrased it. Because listen, there's plenty of modern players who are way more studied on solvers than me. I have really not done it that much. And I actually view
Likewise.
poker peak as probably being like 2015, like right as solvers were coming out, if I was really going to be honest and look in the mirror. But what I would say is you touched on a key thing there, and was kind of my point. Yeah, like the solver might not tell you how to win the most money because you're going to win the most money exploiting people. But what the solver will tell you is it gives you a pretty precise, if the solver is any good, it gives you a pretty precise like GTO output where the solver's playing itself. And that's where, and I kind of touched into this, it's like if you start to look into the solution, at some point you ask yourself, like, when is my opponent going to be playing different and how much more different than this solution? So what I'm saying is like, it's a level of precision, and then you win the most money. Sorry, it was something I want to say, but I feel like it goes without saying, but maybe that's not true for most people listening to this. You then win the most money by once you figure out where your opponents deviate, by then adapting the strategy to take advantage of that. So for example, you said an opponent who's super aggressive on the button. So let's say they're raising 80% of hands VPIPing or RFI rather, instead of like 45 or 50. Well, now you can, you look at what a solver output for 3-betting would be from the small blind, which is more aggressive than what most people do. And you could probably up that shit like bananas, because now, the button is either going to super overfold the 3-bets, or they're going to have to defend with like super weak hands that hands like that weren't that good against a normal button range are great. So I'm just saying there are very easy, and there's also downstream exploitations that happen from this too. That's just like a level 1. So what I'm saying is that solvers are actually fucking amazing. The thing is that most people just aren't really good enough and don't put in the time to understand how fucking amazing they are. Like, not only that, you can node block in solvers where you could have the solver tell you the output if the guy does raise 80% of buttons. You could just change it to do that and then have, a solver like work for a while and tell you what to do. The thing is, one of the things I've realized, because I don't work that hard on my poker game anymore, is that like the more like I work with a coach who's really good in No Limit, and I talk, and it's like the more I talk to guys who do a lot of solver work, I realize like, man, like the tools available if you really wanted to put in a bunch of time to get good today, it's just so much different. And when it gets to the chess versus poker discussion, like the thing, like I love games, but what attracted me to poker and say not chess is back when I got into poker, it's like these poker books we're talking about, it's like child's play. It's like they're checkers. It's like once you got really good at poker, what Dan Harrington or whoever had to say about how to play it, like good. That's what like a guy who's 8 levels below me is thinking. And I'm like up here in my brain figuring out strategies that no one in the world or only a handful of guys are doing. The thing is that solvers completely like changed that meta to be like, now you can study really good strategies and work from there. And studying became so much more important than I think it was like 15 years ago. And that's where it's starting to converge more to chess. Still, obviously, chess is, as you said, closed information game, completely deterministic. Studying is still good. And it's so much easier to get the answer to a chess question. Now, you might not know why, but it's easier to get the answer. So I guess to kind of wrap it all up, let's not slight solvers. But yes, I agree that the level
I'm
one.
I'm not trying to slice solvers at all.
Yeah. The level 1 though of like, is this how I should play this spot, especially in a game full of guys that are not that good at poker? I mean, the answer is no. You could probably do a lot better, but that's not what the solver is trying to tell you per se. Anyway.
Yeah. No, but wouldn't you say that if you're at a table, you're at an 8-ring table, and everyone's playing GTO, and you're not, but they are, is it easier to exploit in that case?
No. The actual fact, in my opinion, is that if you're at the impossible table that doesn't exist, where everybody is computers are playing a solved like good GTO strategy on every street. The whole idea of that is that you basically can't beat them. That is what it is. Like GTO on some level is basically like a perfect defensive strategy that you can't beat it. And if everybody at the table is doing it, it would be tough. The thing is that in real life, like even the best players in the world will make errors on what GTO is supposed to do. And like you're very rarely playing with like Steven Chidwick or Adrian Mateos. So guys that are like much worse than them are, if they're trying to replicate GTO, are making huge errors all the time, you know? So like that's already kind of a straw man that like doesn't even exist in real life. But not only that, it's like even if you do know the right RFI range, like good for you, that's not that hard to look at a chart and solve. What starts to get difficult is like the responses. Like, so give you a quick example to show you what I'm saying. Modern solver theory is starting to do in a lot of like out of position small betting, right? That like you don't do it as much in position because you get to check and go to the next street. So usually not, but out of position, you do a lot more small betting. One of the reasons why small betting performs really well in a lot of spots in real life against humans is that if you look at small bets, like a guy bets, 15% of the pot on the turn, the strategies against it involve like usually really high minimum defense frequencies of calling a whole bunch of shit, raising light for value, raising for bluffs, and even good players don't play like that. And so the reason why these small bets are overperforming a lot in real life is because on the first level of like, how are they responding immediately? People respond very poorly, even good players. So that's why you see a lot of like really good studied players starting to do these little strategies, or a new one is like the 3-betting out of the big blind for like smallish stacks against late position raises, because like people are kind of overfolding, and now that's become a whole thing. And now a lot of people are doing it now, but that used to be a pretty big exploit a couple of years ago. So I'm just saying, like, there's a lot of stuff that solvers can help you suss out. But the reason why is because you look at the response and you ask yourself, like, are my opponents actually doing this? And if the answer is no, they're like doing something way worse. That's probably a great strategy to implement.
All right, I'm gonna jump in and moderate a little bit here because I don't want this to turn into a GTO versus exploit modern game theory podcast. Although I'm sure that would be a fun one too. So like maybe we chalk up a round two. So I'll moderate a little bit.
Listen, Vinny, we can continue talking about poker after the podcast. All right.
Yeah,
all right. I'd be happy to talk poker with you because this is all
I'd be
stuff
happy
that
to
I
get you to coach me. I'm still. I've had 3 top 10 places this year in being a biggest tournaments, and I'm still chasing my first win. So any advice you give me would be fantastic, and really appreciate it.
Listen, I'd love to talk poker with you, and also then to also hear back your thoughts on a lot of other things in investing, because it's something I also do on the side, and I've obviously have way less experience in that. Maybe similar to the poker delta. So anyway, let Matt please moderate and move us to
Matt, go
the
ahead.
next topic.
Let's talk about the this is where I think the most interesting conversation is right now with in particular the two of you. There's a lot of kind of FUD going on right now in crypto Twitter about MSTR and Saylor. And Vinny, you've been pretty outspoken about your thoughts on this. Rast, obviously you're a huge Bitcoin supporter, and I think to some degree a Saylor supporter as well, at least in the conversations that we've had. And I would really just love to get your thoughts, Vinny, first, on what we're looking at, because obviously when BTC is trading at like 120 and his cost basis is down at 60 or 50 or whatever, like it's just all like sunshine and rainbows. He's able to raise capital. He's just like a constant buyer. Everybody's celebrating him. But then when his cost basis drops, or sorry, when Bitcoin price drops, we were at a point there around 80 where his cost basis, I think, was at 74. And all of a sudden his buys aren't so big. And he's having to service these debt instruments in the preferred stock that he's issued. And now all of a sudden the narrative like changes really rapidly. And, a lot of people are kind of wondering like what's going to come next. What are your thoughts?
So let's just talk about Bitcoin versus MicroStrategy. I think we all have to agree on a couple of things. First of all, if you want to own Bitcoin, buy Bitcoin. Strategy shares, A shares is not Bitcoin. A fancy way of getting some sort of levered return on Bitcoin, but it's not owning Bitcoin. It's not like you have it in your wallet. You have some shares in your account. That's one thing. And so these are two different things. These are two totally different instruments for investing. Bitcoin and owning Bitcoin and having self-custody of Bitcoin is a very different thing from owning shares in a public company that can do whatever they want. Like last week, he decided to, for whatever reason, not saying it was a bad idea, but he just diluted all his common stockholders $1.4 billion so he could have enough cash to pay 21 months worth of interest, right? Your shares were diluted in that event. You had no control over it. The whole point of Bitcoin is that there's a fixed supply, there's a fixed rate of inflation. It's an asset which you can self custody, and probabilistically the network won't change the rules, so you know what you own, and it's an asset for that reason, right? MicroStrategy is exactly opposite. He has super voting shares. He can pretty much do whatever he wants. He can lose his mind one day. You have no control over that. So let's just be very blunt about the fact that $1,000 or $9,000 Bitcoin or $9,000 of MicroStrategy shares are not the same asset.
So I don't have a ton to say yet. Mostly, I just agree with what you're saying. I mean, I have actually for a very long time never owned any MSTR until about the last 2 weeks. My personal portfolio, been a long time Bitcoin holder. I do agree with you about MSTR. There's kind of a caveat I want to add. Saylor himself has been very clear. If you listen to him in different interviews, it is true that they can kind of do whatever they want. Unlike if you own the Bitcoin, which by the way is a great reason to self-custody, which for a number of reasons is one of the most secure ways you can basically, other than physical monkey wrench attacks, it's the number one most secure asset you can hold as long as you hold it in the right ways, which isn't that hard to learn how to do. Anyways, getting back to Saylor, it's kind of like, yes, but he's been he understands exactly what you're saying. And the one thing he has been, if anything, is super clear, more or less about the consistency of MSTR their number one goal is to acquire more Bitcoin. I will try not to sell that Bitcoin. I will try to use the tools at my disposal, which is essentially, ways that the vast majority of people can't do. In other words, get loans with as good kind of interest rate terms or even offer structured products. Regular people just can't do stuff like that. Pretty much 0% interest rate loans, which, have a call on the shares, or even offering a structured product, which we could debate about, is he's offering terms that are maybe too good on the interest or whatever. But it's so I agree, but I think you're kind of slippery sloping, or I don't even know how I want to term it, this idea that oh, he can do whatever he wants. Sure, ultimately they will, but he's been very consistent about what they're going to do, and I don't think that's going to change. So I would expect them to be a pretty reliable actor in terms of our goal is to acquire more Bitcoin, and they're not going to do something crazy with regards to that. Now, they are going to do what it takes if things get ugly to try to not go under, right? Which could involve stuff like what you just said, diluted the shares, free up 1.4 billion, which is 21 months worth of paying their structured products. The structured products terms could get worse at some point. It could not be 10 or 11% APR, which is better than you can get anywhere. And it could get worse on STRC. Anyway, that's kind of my response to that. Mostly agree with you.
So let me sort of dig in there. So what Saylor's done is he's bought a bunch of Bitcoin at varying prices. His average price is 75K right now. He's been buying it up the whole time. By him buying and taking those coins out of circulation in the market, he's pushed the price up. I mean, I think there's no denying that he's been the biggest buyer of the past 3 years. And a lot of this run and the support levels that he gave was to buy Bitcoin. And sometimes he would overpay for Bitcoin. When any half-decent trader could have told you the RSI is up, it's you shouldn't be buying at this point, but he would keep buying. And now it's come down. But, there's been, he's getting closer and closer to his average cost. Because quite frankly, MicroStrategy wasn't being they were just in a hurry to buy the Bitcoin. They weren't doing it in a smart way. And there was some market distortion. So what he's just done right now is he's sold a bunch of shares. If I was a shareholder of A-class shares in MicroStrategy, I got diluted down, so more cash to come in. That cash is being used to pay investors. Okay, typically that's in Ponzi territory, right? You've got to sell shares of one class to go pay the interest of the debt for another class of shareholders. And that's the other 5 classes that he's got. Now, the good news is there's only about $8 billion of debt against $50 billion of the Bitcoin. So it's not the end of the world. But the thing is, when you borrow or take money and this in leverage, you're borrowing from the future, and then there's a cost of that borrow. And that borrow, if the price of Bitcoin doesn't rise, so he can't issue more shares or whatever else, or he can't sell the Bitcoin, it's vampiric on the A-class shareholders. So if the Bitcoin price dropped down to 50K or 20K, and he has to meet the debt covenants and pay the debt interest, the only way to do it is to sell common stock or sell the Bitcoin. If he sells the Bitcoin, then the market momentum starts to unravel. It becomes really bad because the biggest holders now selling Bitcoin. The market would react to that, and the market depth wouldn't be there to satisfy the needs. So I think he did the right thing by diluting the stockholders last week, but I think he did it at the wrong time. He should have done that at 2.6, 2.8. It just shows a bunch of naivety. When his MNAV was sitting at close to 3, he should have been stockpiling cash, and so he can raise more debt and have enough cash to cover the debt and use that debt to buy. He did it the wrong way around. And now, to me, it just shows that like they weren't thinking about this very strategically or long term. It was just a kind of a panic station. Says Bitcoin's going to $1 million this year. Let's buy as much as we can, as quickly as we can. It doesn't matter. And that's just not. It's just not a practical way of looking at it. So to me, it looks like the team is kind of naive about crypto. They're very new to crypto. They're like 4 or 5 years in. They're like teenagers in my mind. Like I'm like the gray beard's been in for 12 years, 13 years in crypto. So I've seen the cycles come and go. Some people would argue the cycles, it's a 4-year cycle or it doesn't exist. I'm not taking sides on either of those. It doesn't matter. The point is that what he's trying to do is trying to accrete more Bitcoin per share. But when he does that, he's actually putting the commons at risk. So the commons have to pay for the downside to the preferreds. And if this thing goes to 200K, 300K, it doesn't matter because now the commons are going to make a crap load of money. So if you want upside, absolutely. But remember, when you buy MicroStrategy A-class shares, you're effectively buying call options on Bitcoin. And he's been open about this. He said this, right? He has basically said it's a levered instrument to get exposure to the price of Bitcoin. I get it. But leverage works great on the way up, not so well on the way down.
So you got to let me respond just because you said like 5 things that I all want to touch on. Luckily, I'm taking notes because otherwise I would be dead at actually doing this. It's been a long time since I did LD debate, talking high school. Anyway, first, I'm going to touch on the 4-year cycle thing. Now, as somebody who's been in Bitcoin for a long time, I actually have what feels like the viewpoint that almost no one has. Everyone is always like either or, which to me is like kind of ridiculous. I actually believe there were 4-year cycles, and we are transitioning to a period where there will no longer be 4-year cycles because the Bitcoin mining halving emissions just like don't really matter in the context of supply and demand anymore.
100% agree with you.
I think it only matters for some kind of like mimetic existence within the long-term holder still thinking it's alive.
Well, no, it matters.
Vinny, let me finish my point because I got 4 other things to talk about, and I don't want to debate this so much. I'm just giving my viewpoint. But like, I do believe it was a thing previously in crypto. I believe it's transitioning not to. I actually believe it shouldn't be a thing this cycle. Obviously, recent PA being from almost exactly the 18-month after the halving has looked pretty bad. I'm actually in the camp of like this probably. I have to admit that it's more likely a bear market than it was 2 months ago, but I still actually think it's all overblown. I have a bunch of arguments about that I make in trading chats and whatever. I don't really want to get into that right now because it's not, but I'll just like long short to say that I think even though we're down like 30% from the all-time high, I think there's a better chance than many people would think that this isn't a 4-year cycle and that there's liquidity reasons why Bitcoin has tanked in the last few years. If you look at like basically the TGA, it dropped down almost $1 trillion. Like there's some liquidity plumbing stuff, as well as the US government shutdown affected it, yada, yada, yada. Anyways, we'll see about the 4-year cycle. I think it's kind of dead and will be even more dead going forward in future halvings. Now, moving on to MSTR, what I would say is I basically like one of your points that you made, and I really agree with you. And I think there is a discussion about how good is, so if you're investing in MSTR, you're basically investing in this company, which does have some opportunities involving getting good debt terms or whatever that most people don't have. They also have some execution issues, such as oftentimes their average buy is slightly above where you would expect it to be by a couple percent based on the last week, as well as like they buy into strength because in part they are the strength, and then they're not able to buy down terms as much because it's harder for them to get money when Bitcoin's down. So you could argue, does some of the execution issues overweight their like kind of like the debt flywheel thing of like them getting debt and buying more Bitcoin? It's a good argument as to like whether or not it should trade us at a premium or not. What I would say that I think you kind of like, I'd say you had a massive understatement with this, is like essentially the idea of like 8 billion in debt to, you said 50, but I think it's like 55 billion worth of Bitcoin. like, yeah, you're right. That's not the end of the world. Even more than not the end of the world. That's like pretty severely under leveraged in a lot of ways. Now I realize the value will go down and the debt values in US dollars. So that does become more of a problem as Bitcoin goes down. But it's like, here we are 35% off the all-time high at like 8K. And Saylor was still about 7,000 above his like average buy price before, when he had not experienced it yet. And you say he's young, but in the 2022 bear market, he was only in Bitcoin for 2 years at that time. He survived being more than 50% underwater for well over a year. 50% underwater
with one share class, and then you have to add in the fact that the A class shares were trading at over $500 at one point, and now they're down to 170, 180. So again, the debt is vampiric on the A class shares on the way down, and so you can't ignore that fact.
Sure. But by the way, it's already sucked a lot out of them. In fact, the diluted MNAV, part of the reason why I bought MSTR for the first time in the last couple of weeks is because the diluted MNAV got under 1, right? So that's including share dilution. So it's actually like stricter than just looking at the basic MNAV. Now it doesn't include the debt, but I don't know. I like toy
But remember,
games
it's still
with
leveraged.
GPC and
It's
whatever.
still
But,
leveraged. It's still leveraged. I mean,
the
you can
leverage is not that much. We're talking 8 billion into 55 billion. Like
okay,
that's
so
not that much leverage.
look, I actually think that the products that he's offering, the debt products, are actually really good yielding products. They're fantastic because Bitcoin has to really come down a lot for those things to not pay out.
Hold on,
right?
don't even say fantastic. What he's doing is, in my view, like I write an article about how to value Bitcoin, and I never even really considered bonds for like many years as like a TAM. Like I was just more like, okay, if you look at the generational who wants gold versus Bitcoin, that's really the biggest TAM it's attacking. And that seems like a TAM that over the next 20 to 30 years is going to win because gold holders are going to die and young people who 80% plus want Bitcoin will take them over. Great. Gold is 25 trillion today. Can't wait for that to happen. But then it's like bonds are, who knows, like fucking triple digit trillions. And if essentially Bitcoin is going to become this gold-like big product that like companies and eventually nation states hold, its ability to attack bonds as a debt return instrument, like you're talking about like crazy Bitcoin valuations that I even think most bulls today, like when you listen to Saylor, and I'm going to call this right tail outcomes, because I agree, I'm not like, this isn't my base case, but it's like bonds suck. Who the fuck buys bonds anymore? Maybe unless you're investing like hundreds of billions of dollars, but like no like normal person is buying bonds. But it's like, you're right. These are great instruments. And what if 10% doesn't end up being it? But what if in 5 to 10 years it's 8%? That's still BTFO, savings accounts, or anything else that you can get like a structured, APR return almost.
Look, the point I'm trying to make on these structured.
I want to play moderator because you guys both touched on some really good points here, but have been kind of dancing around some of the core points. So I think what I would like to know is, and I think a lot of maybe more novice traders out there, is, first of all, Bitcoin is a decentralized currency, right? And like the whole like original like cypherpunk like view of this is like it's a distributed thing that nobody controls, nobody owns, and is kind of for everybody. And then here you have Saylor come along, and he's like bought up to date, like he's approaching like 3% of the entire supply, right? So he's essentially like centralizing what supposed to be a decentralized currency, which when it's moving up and everyone who holds it is making money, no one has a problem with, right? But then when he starts approaching, and Rast, you said something in particular. You said he's been very, very consistent on what he said. And I would actually push back on a little bit on that, because very recently himself and one of the other executives at MicroStrategy, I said something to my knowledge just for the first time, which is like, we will sell Bitcoin under certain scenarios. And the narrative up until that point,
They also said
the narrative.
Sorry, man.
I will never sell Bitcoin.
Yeah, that is correct. They also said at one point they wouldn't sell A-class shares below 1.5 in NAV, I think it was.
Yeah.
And then they changed their mind like a month later on that. So he's backtracked on these things multiple times. He is inconsistent with these guidance.
So, well, listen, I just agree with you first on that point that he's obviously been very naive. And I think anybody smart realized, like when MSTR had that fucking blow off where it went over 500 and the MNAV was like 3. I mean, dude, I even had like a buddy of mine who's into crypto would just be like, I just sold some MSTR calls. There's no way. Like, you know what I'm saying? Where it's
Yeah, yeah.
like, because like, I think, listen, guys, like 3 MNAV, like get the fuck out of here. You know what I mean? And I just think they didn't, you're right. They didn't really like think that through. Now, that said, now they're kind of like backtracking some things because they're starting to realize the reality. I think it is reasonable to argue that like MSTR, for certain reasons, maybe should have a very small premium, like 1.1 or something, just because you're getting like, what is the return they're actually getting on their debt and their accumulation strategy versus just holding whatever. Like, you know, we could debate that. You know, anyway, the other thing about the cypherpunk thing, listen, what Bitcoin is has changed a lot since inception, and it's will continue to evolve, and that's part of the beauty of Bitcoin. I mean, like, listen, you want to talk about Bitcoin versus a tech utility coin versus like the monetary whatever the fuck store of value. Listen, the block wars helped resolve that debate, and that was a huge fucking debate. And now it's like the cypherpunks are saying this. Okay, well, listen, Bitcoin was never going to displace gold and potentially bonds, becoming like the largest asset the world's ever known, being like a pure cypherpunk thing. Now, the thing is that you are going to have entities that hold a bunch of Bitcoin, whether it's MSTR or ETFs or all this. The beautiful thing about Bitcoin is that if you want, you can just go buy your own wallet and hold it on your wallet and send transactions on the chain if you so choose to, and you will always have, you know, that right.
Okay.
This
Let
is
me
just an optionality. Now, we could debate at some point in the future if enough governments and entities hold the Bitcoin, what will that mean? I don't know. But
so I
like,
want to
you'll always have the option to hold it yourself and send transactions yourself.
yeah, I want to be very clear. I'm a Bitcoin holder, and I'm a big believer in what Bitcoin represents and the opportunity it represents to. I mean, I think as an example, I think the U.S. government, you know, has shown consistent inability to manage currency, to time things correctly, and to act in the best interest of debt holders, which is essentially what the U.S. dollar is. And it hurts us all, and we lose buying power over time, and it's a constant issue. So I'm not arguing about like the merits of Bitcoin or how it compares to a utility or whatever. I think what I would like to hear a debate on is, does Saylor pose a systemic risk to Bitcoin? Because I think on one side you have like
Yes.
the Saylor cult following of like Saylor's God and he's so genius and he looks so great. But even in this conversation alone, you know, there's been like I think Vinny made some really great points about like how some of his strategy was maybe not so well thought out. Maybe it only looks good going in one direction, going the other direction, it does not look so good at all. And even when we come and flirt, now that he's more levered than he was, because you mentioned, Rast, that at one point, you know, he was 50% underwater, but it didn't look like, you know, it was all going to come crumbling down. Now he's more
And
levered. He has more classes. He has more debt to service. And he is talking about selling Bitcoin.
Is he a lot more levered?
Absolutely, because
So leverage is a moving target.
Yes.
As it stands today, he's not much more levered. Look, there's more leverage than he had in 2022 because he didn't have the other classes of shares. So he has some leverage. If the Bitcoin price dropped to 45K, now his leverage goes through the roof. Now he's sitting, 20, 30, 40% leverage, whatever, 30% leverage at that point. But
by the way, he can survive that though, for sure. I mean, like, not indefinitely.
Well,
let me just say this, not indefinitely. Here's all that I would present, because I don't think people think about this the right way. In a universe where we're 10 years from now and Bitcoin price is like 30,000, is Saylor fucked? Yeah, he's fucked. But I'll tell you what, if you look at any kind of like network growth of any kind, Bitcoin is not growing as a network. If it's worth 30K in 10 years, it's probably already failing. Like Saylor like, to me, the concentric circles of like, what's interesting isn't when Bitcoin fails, when Saylor fails. It's like, when does Saylor fail when Bitcoin wouldn't fail? That's what's interesting. And to me, the real truth that like people who denounce MSTR don't want to admit is like the vast majority of time that Saylor fails, it's like Bitcoin is kind of already on the road to like not working. It's not being adopted anymore.
If I took the view that Bitcoin is going to be 150, 200,000 next year, then buying MSTR makes a ton of sense. It's a very nice leverage call option on Bitcoin, right? Do I think that Saylor would screw it up along the way and buy Bitcoin at too high a price before the next crash or whatever? Yeah, I probably would, but I would time my entry and extra points in that. So I think it's a good speculative play, but I don't think these guys manage their treasury and buying as well as a trader does. And I've been trading for years. So that's one thing. But
But
I
by
actually
the
want
way,
to, I
I
want to
agree
backtrack.
with you with that. I agree with
Okay.
you. And by the way, my MSTR that I purchased, if Bitcoin goes on a run and the MNAV gets to like 1.2 or more, I'm like out whether I sell that for Bitcoin or something else. So I 100%
Exactly.
agree. But yeah, anyway.
Okay. So okay, it's fine. So let me ask you this: the systemic risk. Were you in Bitcoin in 2017?
That was the year I got in. Yeah.
Okay. So if Saylor was around back then, he had 650,000 Bitcoins, and we're having this whole blockchain, block size wars debate. And he said, guys, I am dumping the chain with the small blocks. So I'm going to go with the big blocks. And that the moment this fork happens, I'm dumping 650,000 coins in the open market. Do what you want with that information. I believe in the big block strategy. Would the small blocks have survived economically?
Yeah, he might have swung that.
Right.
Yeah.
So now we have concentration risk because I don't know whether you're familiar with the whole knots versus core debacle right now on the upper term limits.
A little bit.
So
I'm not like
and Saylor, yeah. So he's already posted a video. He's already said, yeah, you know what, the changes and stuff. If it gets out of hand, and right now it's at 21%, and that's 21% of nodes. The mining may actually be a lot higher. So miners may be more supportive of knots because you can't track the nodes versus the mining, the non-mining node versus the way the software is done right now. So if there was enough hash power that said, we're going to go do this change, and Saylor says, if there's a fork, I'm dumping the core side of the fork because I just don't want to have, I don't like the changes that was made in core 30. He actually would swing it yet again. So the first time would be hypothetical, but this time he would swing it because he could just dump the side he didn't want. And economically, the market could never handle him dumping 650,000 coins on a split chain. So there's a lot of concentration risk. I tweeted this out like 2 years ago. He's the most powerful person in Bitcoin because he literally can swing the chain. Interesting, Satoshi has never stepped up to swing the chain one way or another. He's letting the market discover it for himself because, first of all, no one knows who he is or any of that stuff, and he's kind of setting it up, right? He actually hasn't moved any of his coins. He hasn't sold his BSC. He hasn't sold his BCH.
Could be dead, obviously, as well.
Could be dead, could be dead, but whatever. The point is, at this point, he's a neutral actor. He has 1 million coins, which can't affect the network right now because he's not even willing to move the forked coins, which he could have done and sold. I mean, if he was alive and on board with one chain or the other, he could have done it. He did nothing. Saylor, on the other hand, if there's a fork, if there's a chain split, if something happens this year, next year, 2 years from now, he chooses which way it goes. The guys out there saying, I run my node, I choose, whatever. Well, if you read what Adam Back and the guys are saying on X about this potential split and stuff, they don't quite buy that story either because where the hash power goes, you kind of have to follow. And you can run your own node. But look, Luke Das Jr. is the number one contributor Bitcoin core of all time. And he has now gone off and got his own node implementation software, which he's using knots. And he's fighting against the fact that they try to increase the upper term limit in the software. Now, obviously, it exists already. The miners who have done this without it, but it's the defaults, it's the filters, it's that whole fight. I'm staying out of it. I'm just kind of watching from the sidelines, going, "Man, this gets out of hand." And by the way, they've already programmed a soft fork height. They've already programmed a height in. I don't know what it is, but it happens sometime. I think in Q1 it should happen when it reaches a certain block height with enough hash power. I think Luke said it was a mass, a miner activated soft fork. My point really isn't about what's happening in Bitcoin politics. The point is that you now have a guy with 600,000 coins that gets to choose. Whether he chooses your side or the other side is irrelevant. He gets to choose.
Yeah,
What say you? So much for a decentralized peer-to-peer currency.
I think there's a limit. I mean, also like that Bitcoin's being held by a company. It's not being held by him privately. So there probably
But he has the voting power on it. That's the point.
True.
He has the voting power on it. And he has super voting rights in these shares. And by the way, I'll finish off with one extra, and I'll go back to a point you made. The 4-year cycle does actually matter for one reason, the halving, not for price and whatever. It matters for network security. If the price of Bitcoin doesn't double every 4 years, there's a huge impact to the miners in terms of the hash power and the cost to maintain and the margins that they can make, et cetera, et cetera. And over a long enough time frame, network security gets affected. If you look at the original white paper, it was very clear that the inflation rewards, which is coming out of the system right now in terms of block rewards, was only meant to bootstrap the system, and transaction fees were supposed to take over and cover the cost of maintaining the network long term, because eventually you don't get much in terms of inflation rewards in the system. We've got a whole different, we had that whole debate in 2017. It may take another 12 years to play out. But unless transaction fees actually rise, or the price keeps doubling, the network is going to come under pressure. And then people go, well, the network will just adjust and you'll have a difficulty adjusting down. Yes, but here's the problem. If you get to a point where the miners say, okay, well, we're done. We have all the SHA-256 hash power that we can't run profitably because the electricity costs above the Bitcoin mining costs, etc. Then you have state and other bad actors who can buy that hardware, plug it into nuclear power stations, and actually attack the network if they wanted to. So the network comes under threat if all the efficient SHA-2 hashing equipment is not deployed on the network at all times. If it ever falls off the network, bad actors can buy it and attack the network using that hash power. So the economics of the network needs to basically be a magnet to pull hash power into the network. I've said my piece.
Yeah. So there's a lot to talk about there. You know, I'm going to start with the last thing. It's like the security budget issue. To me, like in my thing, I believe the two biggest issues facing Bitcoin are the security budget and quantum. I'm actually less worried about the security budget. First, in order to address this, I agree with you. The price of Bitcoin needs to keep going up. It needs to be basically keep getting adopted like a network. That's why when you frame it, this is kind of like an all or nothing bet. The idea that, oh, I'm going to buy and like Bitcoin might be worth 100K in like 20 years. Nah, that's not going to be the way this works out. Either Bitcoin keeps growing as a network and kind of gets global adoption, and then at some point in the future, you're right, like the emissions that are getting, or sorry, the emissions that go to the miners probably won't be enough. And I do agree, some kind of fee structure will need to go. But by the way, that already is in place. Like there doesn't even need to be a fork for that to happen. So to me, that's like a much less existential
What do you
problem.
mean?
And I think it's like there can
What do
already
you
be
mean?
fees. Like you
No,
can
no, no.
already
The
have
point, the
fees with
point is
transactions. And that can help. Hold on, but that can help cover the mining costs, like with the
okay.
miners.
So now we have to go way back here. The low priority fees are one Satoshi per byte right now, right? The transaction fees on Bitcoin right now are insufficient to cover the cost of the network.
No,
Like
I agree
nowhere
right
close.
now. Listen, the point is the security budget on the mining rewards only becomes an issue like at least 10 years into the future. And at that point, if Bitcoin's continued to grow, now we're talking about taking larger fees in order to help cover
But you have
the difference
a
in the mining emission.
seven transaction per second limit. So how do you get the quantum of transactions
I
high
mean,
enough?
eventually you're going to get layers built on top of Bitcoin, such
Well,
as
so the
Lightning
problem
and
is
many more.
exchanges have become layer two. Okay, so you've got all the transactions, all the Bitcoin trading that you see, all the exchange stuff, it's all happening on exchanges. People are moving money between each other. So it's all
Listen,
saying,
I
yeah.
understand, but you will have the option to still trade on layer one eventually. Now, it might be more expensive 10 or 20 years in the future, but you will have that option.
To
But
trade on
yeah.
The other thing
Bitcoin?
I want to say too, I mean, because you brought up a lot of different points. Like, yes, I agree, Bitcoin will have to keep growing, but that's kind of why this is like a, hey, it's going to like 10 or 20x plus in the next like 10 to 20 years, or you're probably going to lose the investment if you were to keep it without selling. Like to me, actually, the bigger problem, and it's not right around the corner, but it's coming eventually, is quantum. And the reason isn't because it can't be solved. It's because it presents sort of two issues. One is just the general, let's call it 737 max upgrade issue, which is that at some point, an technical upgrade will need to happen. And there's always just risks with that because, like, what will happen afterwards? Like, because the biggest problem Bitcoin has is if it stops working for some reason, and you run into that problem if you have a large technical upgrade on a system that could have a bunch of unintended consequences down the line, such as the 737 Max, which crashed after they did an upgrade. The other problem with quantum to me is that one of the issues will be, like, let's say Satoshi's coins are lost because they're either lost or he's dead, right? There will be recovered coins, and the network is going to have to decide, and I have a stance on this, whether it allows them to be recovered or it does something. I'm very firmly in the camp of it should allow them to be recovered, even though there will be price consequences. And I've toy gamed that out. And I think that whoever recovers them will be incentivized not to crash the price of Bitcoin because they'll have very large amounts of Bitcoin denominated wealth that just came into their purview. For example, also it's against the ethos of Bitcoin. And this is a way to ultimately let's imagine Bitcoin lasts for 1,000 years. Every so often, there will be technical upgrades that need to happen. And this is a way to recycle the coins to really have that 21 million Bitcoin limit or 100 million times that in Satoshis stay and not have the chain ossify because these coins are lost. So I actually think for the long-term health of Bitcoin, it's better, et cetera, et cetera. Completely different kind of argument. And now I forgot some of the other points, but that's just talking about some of the risks, like the security budget and quantum.
I think the
I feel
quantum
like you
stuff
guys kind
is
of went in two different
still a
directions on
while
that.
to go.
Yeah.
Well, so Vinny, I'm very curious. Are you long Bitcoin at all? And if you are or are not,
Sure.
why? And also, like, what are your current investment focus?
So I'm when I say I'm long Bitcoin, I have some Bitcoin. I mean, it's a small part of my portfolio. Of a lot of, I mean, I've got a pretty diversified portfolio. Again, diversification is important. You got to own some Bitcoin, you got to own some gold, you got to own some silver, you got to own some property. You have to own, a bit of everything, right? And it's for me, it's like I don't think about it because it's not big enough to really worry about. Some people like literally they wake up every day and they look at the Bitcoin price because that's whether they feel rich or poor. But Bitcoin can double and it wouldn't change my life at all. And that's just because I guess I got in early and I diversified after I got in with Bitcoin, so I sold somewhere along the way. And I invest in other things, and I've got a whole bunch of funds that I invest in, and honestly, like a lot of this, there's a lot of security risk with holding a ton of cryptocurrency. So I've gotten to the point now where I just have everything sitting in funds.
Let me put it to you a
Yep.
different way, because let's assume for a second that the average viewer of this podcast is not like obscenely wealthy and is like trying to make a decision on like whether they should own Bitcoin. If somebody were to ask you, hey, I have $10,000, where should I put that? Like, obviously it's not going to be like a hedge fund and property and something else. It's probably going to be like, let's just say no more than 2 or 3 assets. Where would you have them put it?
I mean, look, $10,000 for a US-based person. You're not trying to preserve wealth; you're trying to create it. I mean,
Right.
you're better off putting into some high-risk bets. If you're trying to invest, getting 5% a year or 8% a year on $10,000 isn't going to change your life for a long, long, long time unless you're adding to the investment on a regular basis. So if you have a thesis that you think Bitcoin is going to go to $1 million or 500,000 or 250 in the next 2 or 3 years, and you're willing to lose the money, go buy some MSTR shares. I mean, that's the lottery ticket, right? Because it's a highly levered call option on Bitcoin. If
Bitcoin
say
going to
this,
$1 million in like a couple of years is like complete fantasy. Also, MSTR
that's
could
what
do.
Saylor says, though. That's what Saylor
No,
says. That's my
he
point.
doesn't. Actually, he really doesn't. Say what
He said
Saylor
32
says.
million.
No, what
Yeah.
Saylor says very specifically is Bitcoin. He has his 21 thing. He says Bitcoin will go up approximately 21% every year. Now, at some point, Bitcoin does get to 10 or 20, but it's in like 20 years that it gets to the numbers
Yeah.
you're talking about.
My point is, whatever your thesis is, right? So
Yeah.
if your thesis is that Bitcoin's going up to 500K or 250K or whatever, MSCR common stock is a good way to play it. If you're willing to lose the money on the downside, the downside is that the stock gets eviscerated because of interest payments or price collapsing or whatever, right? So that's a leverage way to play it. Buying Bitcoin, your 10K may become 20K, maybe become 30K. Who knows? Like if I had honestly, if I had 10K and I was like starting out and trying to figure out how to make that money for me, I try to use that money to start a business. I think most people just don't appreciate how much more wealth you create by starting businesses, providing goods and services, and scaling that 10K up. I started my first business in my bedroom with, it was less than 10K. The company was bought by the Carlyle Group recently. It's got 1,000 employees. I don't know what the revenues are, but like I did that with a very, very small amount of money, working at home, just building a business. And so I think with small amounts of money, you're better investing it in yourself, building skills or building a business for yourself, things like that, than trying to put it in picking a stock ticker or crypto or whatever else. Like your biggest investment should be yourself in whatever way, shape, or form you think about. And now that's a different number when if you came to me and said, okay, I've got $1 million right now. How do I put that to work? That's different from 10K or 20K or 50K, even 100K. Start with improving yourself first. And then when you have sufficient funds and you can go deploy that, then there's other things to look at.
Yeah.
I like that.
So to touch on all that, I actually agree with you that most people should buy Bitcoin and not MSTR. To me, MSTR is like a slightly levered trading product that involves a lot of decisions about what the MNAV is and their execution. And it's like you shouldn't get into that if you're just like a regular person looking to hold Bitcoin. Like if you like the Bitcoin thesis, just buy Bitcoin. Like leave MSTR to traders who are going to actually evaluate all the shit we're talking about, plus a lot more as to whether or not they should buy or hold MSTR or like one of the things MSTR likes doing is also having volatility and whatever for traders already. So I agree there. With the business thing, I actually totally agree with you. Like investing is mostly for the wealthy, really, other than for, let's call it like regular people's IRA retirement funds. That's a kind of different story because now that's like tax sheltered money that even if you're not wealthy, you want to invest. And no doubt, like I was coming up in poker when I had a $1 million bankroll. The best thing for me to do wasn't to like take money out of that in order to like invest in things. Like I was the best investment. Like I had a great return on my capital. Now with poker, the limit on the return of your capital comes at some point once you get 10 million or 20 million. It gets much harder to have a good return on your capital than when you have like 500,000. Like also the business thing, again, parallel, I totally agree with you. Starting and running businesses is hard as fuck, but if you can do it, great way to make money, no doubt, but it's very difficult and it requires a lot of time investment. But yeah, you're young, hungry, and talented. It's a great way to make money. I guess if I'm going to then now move on and present kind of a new topic, it's going to be more about like what we've been talking about, but like, how do I want to frame it? The way I want to frame it, and I kind of said this before, but I'm going to try to say it better. It's like, to me, the most important thing, and I do agree with you, like Bitcoin kind of needs to keep growing in order to succeed. You can't even track the growth of Bitcoin on a logarithmic network growth. It's really had a logarithmic growth pattern so far. And I think you need to think about the MSTR as it relates to Bitcoin, the success of Bitcoin and MSTR as, again, the times where MSTR fails, where Bitcoin succeeds or would have succeeded, because that's what really matters. Because the time Bitcoin fails in adoption and MSTR also fails, they don't really matter. MSTR just will exacerbate and quicken the failing process because it'll dump on the way when Bitcoin's already failing. So, and the way that I frame it and why I'm not a big MSTR bull. As I've said, I've never even owned it till the last couple of weeks when the MNAV got negative. And again, it's not like a forever hold for me like Bitcoin. I'm trading it. But the reason why I'm kind of bullish is like the way Bitcoin wins and the way it gets adopted is entities like MSTR buy the fuck out of it. Because who's selling the fucking Bitcoin to MSTR? It's all the OGs who have hundreds or thousands of coins have dumped the shit out of it over you look on chain for that. So that's part of the like recycling process. Like as Bitcoin gets adopted by companies and eventually states and whatever, individuals are going to be the big net sellers. Like the longtime holders are going to be realizing, and that's like part of the adoption. Will this adoption look exactly the way cypherpunks who have been in Bitcoin for like 10 plus years want it to look like? No, but they probably didn't really think, what does global adoption look like? Like, where is all the money globally? Guess what? Funds, BlackRock, governments, they have all the fucking money and governments can print the fucking money, which is the whole reason why Bitcoin became a great idea in the first place. So it's like global adoption does look like these motherfuckers are buying our bags who've been in it for like, that's the way it looks like. And the people that have been in it for 10 years and are now worth millions, tens of billions, hundreds of millions, or even fucking billions now, at some point it's like, I'm worth $1 billion. I want a yacht or I want a private jet. What am I going to do with my money? And so it's like, either you're loaning the Bitcoin for USD or you're selling some of it or whatever it is. And that's the way adoption looks like. And the way it succeeds is enough entities like Saylor and others need to come and keep on buying, and with the idea that like Bitcoin is taking over for gold. If that narrative fails and the demand doesn't come in, it will. And I think MSTR, and this is what I'm kind of arguing with them, yes, they make a lot of execution mistakes. They're a pretty bad trader ultimately, but are they being intelligent enough with their leverage to at least have this circle of times Bitcoin fails versus times they fail to price that out long enough where that probably works out? And my answer to the question is yes, by and large, I think MSTR is actually a positive actor, not a negative one, in the adoption of Bitcoin globally. And that the times MSTR causes Bitcoin to fail rather than fails because Bitcoin is failing is actually somewhat vanishingly small and much smaller than almost any critic thinks. And that's sort of the summary of my point.
All right.
I took a bet with a friend recently. It was a 5-year bet that it was actually quite a decent size bet. I think it was like 200K in 5 years. That the returns on Bitcoin versus gold will be higher in percentage returns. I think at the time Bitcoin was like 10 something, and gold was 3,500, something like that. And
Oh,
so
yeah.
I'm already up. He
You're
emailed me the
obviously
other day. So
way
it's not
ahead in
looking
that
good.
bet
Can
right
I,
now.
can I,
But
can I bet you, can I bet you 5 years BTC gold? I'd love to, I'd
sure,
bet that.
I'll take
So,
that. I'll take 100K that in 5 years, the Bitcoin will be worth the gains on Bitcoin at 93 today versus gold at 42.50. That the percentage return on gold will be higher.
another way to frame this is you look at a BTC divided by gold chart, where it's
Sure,
at
you can do that
today,
too.
and it's whether or not in 5 years Bitcoin's either higher or lower than where it's at today. Sure,
Yeah, that's
let's
fine.
do it. I would like to only just because let's do 50K.
Okay, let's do 50K.
Okay, the reason.
All
That's
right.
fine.
Listen, I'm just one of these people.
I'm already in for 200. I'm already in for 200.
The
Might as
thing
well
is,
add
the
50 more.
world where I win this bet, I don't give a shit about 50K way more than the world where I lose this bet. Because I'm
Yeah.
way longer Bitcoin than gold. So like, and that probably isn't going to change. And that's why I'm making the bet with Vinny. So this is more just like the emotion. It's not an EV thing. It's like, how much do I hate losing the 50K when I lose the bet versus when I win the bet type of deal.
Yeah.
I'd love to EV wise,
I mean,
aspire a million. I'm also not as
the-
wealthy as you. I'm not as wealthy as you, and more of my net worth is may or may not be in Bitcoin. I'm not saying that publicly.
So actually, the right way to price this bet should be that I get paid in gold and you get paid in Bitcoin. because if we're right, the dollar's been devalued significantly, and then we're getting 50. But we can leave it in dollars. It's fine.
Yeah, let's do dollars. Let's worthless
Yeah.
paper money. All right, so December 3rd. So that'll be December 3rd, 6, 7, 8, 9, 2030.
2030.
Yeah.
And we'll just
Yeah.
I'll get your number and I'll message you right after. We'll look at the
Yeah.
BTC. We'll just stamp the BTC and gold prices and whatever.
That's
50K.
fine. That's
All
fine.
right, booked.
Go vote then.
Nobody even offered me any
No,
action.
listen, I'm kind of bullish gold. I'm kind of bullish gold, at least in the next 5 or so years. Gold is doing really well. That said, and a 5-year time frame might be good for you, even with my thesis. But I actually think that on a 20-year type time horizon, I think gold is going to lose a lot of value to BTC. Although right now it's very clear that nation states don't give a shit about buying Bitcoin and they do care about buying gold. So, but that's also like gold has appreciated like 2x in like a year. So
There's
BTC
a lot
gold
more
is
to
down.
come.
Yeah.
My prediction for gold is 10K within the next 2 years.
Wow.
I
So what
think
do you,
gold doubles from here.
are you, what do you think will outperform in the next 2 years, gold or silver? You think silver's a lagger?
You know, silver's kind of a weird levered product. I think you could have a situation where for a brief period of time, silver goes to 100, 150, whatever. It'll shank back down though. It's just one of those things. I think gold, for me, gold is the real store of value, not Bitcoin. Just personally, I think Bitcoin's a highly, it's a secular asset levered. So Bitcoin traces the NASDAQ way too closely. Even today, Luke Roman, I posted a tweet about this.
I read his article, by the way.
Yeah,
I like his newsletter a lot. So I'm bullish gold as well.
Did you read the part where he said he sold all his Bitcoin today?
That was actually in his last article. It came out.
No, the one that came out yesterday.
I didn't read that one yet, but what I'm saying is in his last one, he already said that. And he said he did it because of quantum risk, and he feels like he doesn't really understand it. And he had been kind of bullish this whole year. I've only been reading this article for a year.
Yeah, but he's been bullish on Bitcoin for years. He's been Bitcoin gold, Bitcoin gold, buy Bitcoin gold. Now he's just gold.
But the biggest reason was mostly the quantum thing, and he feels like he doesn't really
I
understand it well
that's not what he said. I think
that's what he said in the previous article.
Yeah. In yesterday's article, I missed the last one. Yesterday's one that he posted, because I'm a subscriber as well. What he said was that it's very clear that it's actually very correlated. So when things go pear-shaped, it's going to go down with everything else. And that's the issue with Bitcoin. And
I agree with you.
That's the risk that Saylor's playing.
This is the phases.
That's the risk.
Gold is like, Bitcoin is like the size of a large company right now. Gold is the largest asset in the world by like over like 6x NVIDIA. And it's totally different. Like, the Bitcoin argument isn't that Bitcoin's going to behave like gold or cash or something today. It's clearly not. But that's also part of the, like, I would argue that's part of the phase. And by the way, I was arguing this 5+ years ago when Bitcoin was like 10,000. And that like, this has still got a long way to go. So like, this is a feature, not a bug. But yeah, but Bitcoin isn't where it will eventually be, where I think it will behave much differently than it does today, further on the Bitcoin adoption curve. The other thing I'd say about gold is that, like, listen, everybody wants to talk about like what are the Bitcoin existential issues, security budget, quantum, on the next 10 to 20 years. Okay, you want to talk about 20-year problems for Bitcoin? No problem. I'm happy talking about them. We already talked about them. I talk about them in my article. I tweet about them. Let's talk about a 20-year problem for gold. Okay. The supply of gold may or may not run into issues with mining on the earth as gold goes up a lot in price. But I'll tell you what it will run into almost for sure is we're going to find massive fucking gold deposits on asteroids in the next 20 years. That's going to crash the fuck out of the price of gold.
I'll buy those from you. So send me the forwards. I'll buy those from you. By the time that the guys get up there, bring the gold back to Earth, lives are not at stake, all that shit. Like, dude, I've heard this. I've been hearing this gold and asteroid thing for years. I don't see it
Yeah,
happening
but
for a
SpaceX
long
is
time.
making it a reality right now. It wasn't
We're
a
not going to
reality
have
5
Bruce
years ago.
Willis and a bunch of miners jumping on the asteroid mining gold, dude.
All I'm saying is quantum computing is not an issue
I
today
love the
either. But
Armageddon
we're like, is
reference.
it going to be in 20 years? Sure, maybe. I'm just saying, like, you want to talk about problems Bitcoin's going to have 20 years from now. Great. The supply issue is going to be a big fucking problem in the next 20 or 30 years for gold. And it's one that gold can't solve, literally can't be solved, unlike the Bitcoin issues, which can be solved. So, like, and listen, you're right. Like, gold's going to go up a lot in the short term. This isn't happening in the next 10 years for sure. Like, that's why I said 20. But my point isn't that. My point is that everyone wants to, like, fucking bear case Bitcoin on some shit that's going to happen 20 years from now. But, like, no one's doing that with gold. Guess what? Most assets, most companies, you're like, you want to hold this company for 25 fucking years? Like, probably not. Gold in 25 years? We'll see. I'm just saying, but everyone wants to talk about the 25-year problem for Bitcoin. So, there it is.
Yeah, I mean, there are other issues, but like, look, and we're way over time right now.
Yeah. Hey,
Dude, this is a fun, great chat. It's always good to have open-minded conversations about these things.
absolutely.
Yeah,
I want to be
100%.
respectful of
Let's wrap it
both
up.
your
Vinny,
guys' time. Let's
yeah, I actually have to talk to a
do another
lawyer in
one in
10
the not too
minutes.
distant future. But thank you so much for sharing both of your guys' views. I think you guys both made very valid, well thought out points on Saylor, on Bitcoin, on gold. That is useful for everybody.
Yeah, 100%.
I think, yeah, this is a great chat. Thanks, guys.
Yeah, no,
And
Vinny,
I'll see you guys in Vegas.
I enjoyed it a lot, for sure.
Likewise.
I'll get your number and shoot you a message about, like,
Yeah, I'm in the chat group.
Oh
with
yeah,
you.
okay, cool.
Yeah, cool.
All right,
Okay.
boys.
Thanks,
Well,
guys. Thanks,
go ahead
Matt.
and
Thanks,
wrap it
Brian.
up. Thank you so much.